Good morning. All right, got my coffee, got my creatine, got my ghee, got my collagen. You guys ready to go? Well then. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Let's go! There's a war. Hey, oil prices are up. Hey, did you notice? So I hope everything is all right with you. I hope you and your friends and your family and your loved ones are safe. And I hope you're trading oil or Canadian dollar or yen or whatever. There's a lot going on. You got to pick your poison. But the thing is, I hope you're not ridiculously late and trading the aftermath of what smart people have already done with their money. So I hope you were prepared. I hope so. That means strategy based on logic and intelligence. Speaking about logic and intelligence, I run something called the Council of Investment Advisors. We have a board meeting today. And we started about 2 years ago. I put $50,000 into a real account at a real brokerage firm on Wall Street. All the members of the council can see my account. They see me log in. They see the money. And we built a portfolio based on logic and intelligence. Yeah, we built a portfolio. And the idea is I teach people how I manage endowments, but we do it through hands-on work. So again, 2 years ago, we put in 50 grand. It's about 110 grand now. And we meet on a regular basis and decide how to invest the money. And the council decides, and then they watch me once the meeting is done and we have done our votes. They watch me log into my trading account and purchase the shares. And they go through the whole process and, reading prospecti, and all that kind of stuff, building and rotating and rebalancing and all this stuff that goes into professional money management. We do that. That's what we do. So I forget when this screenshot is, but it says 98,000. It's now closer to 110, and our passive income is over 12, and our internal rate of return, I believe, is over 10. So we're doing great. You know what I really like though? Is when the markets are crashing like now, we actually outperform. We do better. Cool. But anyways, that's going on today. You'll have to let me know if you like that, if you're interested. My YouTube is glitching. Page won't expand. Weird. Let me hard refresh it. Control R. No, there's something weird. There's something wrong. I can't. Oh, I think I figured it out. No. All right, hang on. I'm going to have to go to YouTube manually. YouTube. And actually pull up our live stream so I can see the chat. Yoo-hoo, YouTube. There we go. So you guys here? Are you alive? Type in. Good morning. All right. So anywho. Yeah, so let's see. Commodities. Oh, I got taken out. Oh, I got taken out. Let's see, the trade's gone, right? Trade is gone. Knocked out. All right, too bad. So sad. Where's my drawing tool? I was long at $66, which was about here. right before the spike, near the annual central pivot point. And I had my stop just at the yearly R3. Okay. Now I moved it after the spike. Now, why did I do that and not put it somewhere else? Does the free package on TRADARS expire? No. So, why here? Mathematically, that is the most you could possibly expect based on whatever, we'll call it normality. We know that there's nothing normal going on right now. But as far as the trade, when I did make the trade, okay, the buy zone is here, and I was bullish. Here we were bearish, and here we were bullish. Now, I didn't think we'd get anywhere near these prices until July, but up is up, whatever. I can't control when and how fast, but mathematically, if you expected more than $99.60, we'll call it $100, mathematically, you're being absurd. Consider it like 2 standard deviations or something, right? So if all I got was 66 to 99.60, if I only got $30 a barrel in 2 weeks, then I should be happy with that. Yeah, and you're like, Wayne, win another $20. Yeah, well, that wasn't planned. That's not my alpha. But I can always get back in when it's logical. But that means I'm out. Also, I was short Euro South African Rand. Does anybody remember that trade? I entered the trade July, Euro Rand, short. Okay, I shorted in July 2025. I got knocked out last night. I moved the stop based on the 4-hour parabolic, which means it's based on volatility. And in this case, volatility was bad volatility. So it locked in my profit quickly. And I don't know what the actual result was, but we know a bare minimum 1,000% return on internal rate of return. So not 100%. That's double. No, 1,000%. But it took me from July to last night. So by and large, I have to find something new to do. Yeah. Cool. So that vol is really something, huh? Yeah, vol's bad. Now let's put everything into context here. Oil has dropped 20% in the last 6 hours. Yeah. Holy Snickers. And so, is there any doubt that I got out? No. Now, does it mean it won't go back up? No, it means I took my profit. And if I do the math, I think that one made 500%. Yeah, 600%. So now I just need a new trade. And so what I might be doing today is looking for opportunities to rebuild. Okay. Yeah. Well, look, I've been trading a long time. So let's be real. The idea of the trade is straightforward. So there's nothing really to be that excited about. Like, I talked every day about buying oil, and you got to be in it before April, and we're going to ride it to Canada Day, and whatever. I talk about it all the time, every year. You can go, I got thousands of YouTube videos that you can go back, dude, right? Straightforward. So, that's not that surprising. It just happened earlier this year, but we had geopolitics. We had Aiden over at TRADARS in the middle of January point bullish. Like, dude, like there's nothing that amazing about it. I mean, great. If the trade worked out, great. The other thing that had nothing to do with me was the war in Iran. And I just happened to be in before. It wasn't my intent to. I actually wanted to go from 65 back down to 60. So I actually had a trade plan. I bought some at 66, but that was my aggressive trade. I wanted to buy more at 65, and I think I wanted to buy some more at 62, something like that, right? That was my trade plan. And it took off. And I'm like, but I only got one of the trades, and it happened to be my most aggressive, and in fact, in my opinion, the worst of the three trades. That was dumb. But I'm like, well, I want to show the way to build a basket. That was my goal. And then, boom, it's gone. It's gone. Had nothing to do with me. Had nothing to do with my strategy. I happened to be in and going the right direction, but I based that on logic and intelligence. Like, that wasn't the smart part. And so then it took off, and a week or two later, we're at 120. The velocity wasn't planned on. The price wasn't planned on. So the only thing I really did is, I put price where I probably should, and said, well, all I got was there to there, which is 500-600% return on investment. I wish I'd put in more trades on that one, right? But whatever. Whatever. I mean, it's just another trade, right? And when you're a trader and you do this all the time, I got the direction right, but that's not complicated, especially with TRADARS. Like, it's so stupid straightforward. They're like, okay, up was great, smart, well played, and then the velocity of which we went through the targets had nothing to do with the trade plan either. And so all I did was lock in profit as smart as I possibly could. And now that's gone. The return is great, but again, had nothing to do with me. It was luck in a way. And now I have to go back and be smart again. Right, Joseph? So now I have to say, all right, well, what do I do now? Well, we're retesting 100. What do I do? Well, maybe I get long again. What does that mean for the Canadian dollar? So then you go to here. If oil goes up, then that CAD starts to go back up. Okay? So I'm eyeballing this. So now it's more like, this is the Canadian dollar versus everything. Don't look at this as a USD CAD chart. It's not. It's a CAD index. I know, wicked smart, right? Don't you wish you had something like this? So anyways, this is CAD versus all the majors. And CAD is not strong. Oil just dropped $20, and you think it's strong? You're like, but oil's at 100. Well, last night it was 120. So Canada's not doing well. But if we have dropped back to 100, and 100 is now support, not resistance, and oil goes back to 120 and maybe beyond, then I got to get back into the trade. And that is frightening, terrifying, and difficult. Well, this is what we do. But do I know if oil's going to go from 100 to 300? No. Do I know if the conflict is settled tomorrow and oil drops back down to 75? No, I don't know that either. This is why you have to think about, well, if I'm going to be a bull, I have to buy higher lows at support. Is this a higher low? Is it support? That's the first one. If the answer to that is yes, then when do I pull the trigger? Well, that's what technical analysis is also for. Did I get a moving average crossover? Did I get an oscillator crossover? Did I get a reversal pattern? Did I get a higher high, higher low? Price action. So that could be something that I end up doing today. So what am I going to pair it against? Yen? Dollar? Swissy? Well, the thing is, this way I have multiple time frames. Well, I don't want to sell that. Right? This is why you have multiple time frames. So CAD Euro, maybe? Why would I say CAD Euro? Well, let's take a look at a higher time frame. Okay, it's been down for a while. Yeah, okay, better. So that gets us into a weird trade, but let's go over there. And now I start eyeballing this. Let's go to a smaller time frame. And I want to be a bear. I don't even care. Okay? I don't even care. Just when is it bearish? Is it bearish now? You can go to higher time frames and you can try to find resistance. So we have a big pivot here. And we have price action above that. So if you connected the two, those are fine. On this time frame, I'm between the 21 and 55. I'm allowed to short whenever I damn well please. Now, higher would be better, but it may not happen. Can't get married to that. Another thing that you could do is change this to a smaller time frame based on implied volatility, not on time. And to do that, I would look at bearish, because we only want to sell this, because we determine maybe euro weakens, maybe CAD strengthens if oil goes back up, but we don't know. Bob. Okay, there we go. And so maybe there's a fill a gap scenario. Okay, looks like we've blown out of some of these bigger pivots, although that one's an interesting one, right? So let's simplify this even more since we've blown out that time frame. Yes, that's good. This is a sell price as a maybe. This is a sell price, and we know there's another one up there. So they all kind of agree a little bit. So what am I looking at, in case I'm just babbling? Maybe euro continues to weaken. Maybe Canadian dollar strengthens. It has been, but not overnight. Why not? Oil's dropped from 120 to 100. Well, what if oil goes from 100 back to 120? Then perhaps Canada will do well. And if that happens, somewhere between our price right now and this price there, I am going to look, take this down. I'm going to tear this down. Cool. So now what? Then I can go in with a different attitude and say, what if I was going to scalp it? Even better. Because now we have the clarity of this. There's my sell zone. Sell zone 1, sell zone 2. See, I'm in scalping mode now. Let's drop it into a fiver. Ha! Ha! Is that it? I don't know. Is it? I don't know. Yeah. Hey, Hope, I don't know about I don't track our Bob seasonally, although I suppose I could. But in my mind, when I'm taking profit on oil positions in June, July period, I'm usually I get out. I would assume at that point, somewhere in that area from, let's say, middle to late May to that maybe August period, our Bob would go up. Yeah. So look at this, guys. What I just took you through is the thought process of intraday trading based on logic and intelligence. Is this going to work? I don't know. But what we do know, it's the right time of day to trade. The second thing we know is if your assumption is oil up, then this is about to maybe become bearish. It's not bearish here, not based on technical analysis, right? Higher high, higher low, right? Like consolidation, breakout. If you were going to trade this technically, you would do something like this, wouldn't you? You can do that too, but what do you, in that situation, what are you telling me? You're like, Wayne, if that happens, oil is dropping down to $80 a barrel today. Another drop of $20 more. We were at 120 and you're like, well, Wayne, it's dropping to 80. Therefore, EuroCAD up. Okay. But if you say, whoa, 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 that's not what I'm saying, then that trade doesn't make any sense. That's what I'm trying to teach, that there's, Newtonian physics going on. This is a clockworks. If you said that up, that's what you're saying oil down. So make sure that's what your intention is. Because you might not want to trade oil, so why don't you trade CAD? Okay. We're at 102 already. Too bad, huh? It came down just enough to knock me out. Well, that's how it goes. The thing is, are you going to buy oil? Well, what if you don't want to buy oil, you want to buy CAD? CAD's cheaper. Okay. What about another one? Instead of oil, you want to trade CAD, but not CAD versus euro, CAD versus yen. Okay. Well, the problem is the logical trade is done. Let me back this out and get rid of that. Well, actually, let's just move it further out. No, I'm going to get rid of it. All right. All right, let's go back in. What does the chart say? I'm going to assume here you know technical analysis. So I will confirm. What this chart says, not my opinion, by the way. This chart says if this is the low of the month, this is what you should expect the high of the month to be. You don't know that? You don't know how to trade. So, anyways, by and large, that has occurred. Could it go higher? Oh, yeah. Okay. But it's behaved quite logically so far. Bottom, 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 bottom. Why do you think those bottoms occurred? Uh-huh. This is the top projected top of last week. Okay. And then the continuation this week. And this is our target now, this 117-ish area for the month. And then the most extreme is we're basically on our way to 120. We'll call it 119 and a half. Will that happen? Oh, I don't know the future. But the thing is, what would be necessary for that to happen? Oil would need to stay above $100 a barrel. Do you think oil will stay above $100 a barrel? If you don't know how to answer that, then you don't know why you're trading Forex. So if you're like, yeah, we're going to go to $150 a barrel from 100. Cool. Well, you might want to buy some oil. There's a good start. But your euro CAD will probably fall. But this CAD yen will probably go not to 120, but to 119.40. Let's be focused here. Not 120, 119.40. It's just what the chart says. But if you can't read the chart if you don't know how to trade. And knowing how to trade, meaning oil up, CAD up. Okay? Yeah. So what happens? Japan imports oil and exports yen. So the supply of yen globally goes up. They have to trade yen for oil. Well, trade yen for dollar for oil. But nonetheless, it's the same thing. They're long oil, they're short yen. The country of Japan. Who are you to fight the entire country of Japan? It's just logic. They have to buy oil at any price. So if oil doubled in the last 6 weeks, which it did, now they need twice as much yen to buy the same amount of oil. Twice as much yen. Entering the interbanking system we call Forex. Oh. So if that continues and Japan has to keep buying more and more oil, spending, you can't imagine if this goes from 100 to 150, Japan has already had to double the amount of yen they need to purchase the same amount of oil. But then they would need another 50% on top of that to buy the same amount of oil, up 100 and then up 50? Right? $200 increase in flows of yen into the interbanking system. So is this your plan? See, I don't know what the future is. I don't think you do, but you should have an opinion. You're like, yeah. I think oil stays at least $100 a barrel, maybe next 150. Cool. Well, that's how you trade it. Or euro yen short. Right? Got to track the flow. This is now the track of flow of money, not in and out of the interbanking system, but in and out of the treasury market. which is another way of you seeing how people are positioning their money based on risk. Kind of important information. You have to know the flow of capital, what we call macroeconomics. Yeah. Right now, things are not good. Oil, 101.5 to 102, we just saw. Okay. 1.2 is where we were earlier today. Now 4.2. Now it's 4.175. Things are happening here at the open. Yield curve is changing. Okay. Don't you remember Bitcoin at 75K last week? Oh my God. And look at VIX. Now it was 32 and 33 earlier today, or was it 36? It was higher today. It was higher earlier today. It's come back down, but still ridiculous. So what is VIX? It's volatility. No, it's not. It's fear. No, it's not. Now, you might translate it to fear, but it's not measuring fear. It's measuring how many options are being purchased against the S&P 500 to hedge it. So really, it's a gauge of insurance. Now, why would you buy insurance? You're afraid your house is going to burn down, so you want to buy house insurance. Okay, so lots of people are buying fire insurance, right? Yeah, in case the S&P 500 tanks. Well, probably will tank, and that's what this is saying. Lots of people, lots of professional investors believe the S&P 500 is going to tank. So they bought some insurance. Cool. So maybe it'll tank. All we know is lots of insurance policies were purchased.
Yen. Volatility shock could spur rebound. MUFG. Pound yen advances as markets scale back Bank of England rate cut expectations. White House is mulling releasing oil from the SPR, but no formal decision has been made.
Oil prices hit highest since 2022 at more than $119 a barrel on Iran war.
Crude oil price surge rattles markets.
Oil output, exports knocked by Iran conflict as prices surge. Oil shock to worsen should U.S.-Israel seize Iran's Karg Island, J.P. Morgan says. Oil, geopolitics, growth risks in rotation, HSBC. If I'm correct, Karg Island is southwest Iran, right near the Strait of Hormuz. And I think it's used for nat gas and desalination. So I don't know if Israel U.S. attack on this island, would it be going after nat gas or cutting off the country from water? I don't know. Or I might have this completely wrong, and that's not the name. Yeah. Right? Let's see. No, that's not. No. That's not even remotely close to what I'm thinking. It's all right. I'm thinking this island. There. Yeah. All right. So I have no idea what I'm talking about. Yeah. I don't know what that island is. Hmm. What is it like? A place, a refueling station, maybe? Maybe that's what you'd put there, right? Yeah. Hey, hey, this Airbnb's on sale, everybody. Oh, dude, can you imagine? You're like, yeah, I'm gonna hang out in this Airbnb. I picked it up for $2 a night, and you can just hear the B2s flying by. I think they're even gonna do B-52s pretty soon. You're like, oh my god, yeah, ah, yeah. Look how pretty it is. Hey, America, you could retire there for cheap. One day, this could be yours. Yeah. What else is going on? That's the only picture. Oh, here's a picture. Nice. Such a yeah, just useless. Everything's useless. Yeah. Anyways, that's so funny. Anywho, yeah, looks like could be some storage, huh? Oh, is that right, Joseph? Yeah. Okay, so if we look at this, oh, really? Okay, things have improved a little bit on the open. Interesting. Interesting. Unless it's a glitch. No, I don't think so. I'll go back. Yeah, okay. Things have improved a little bit on, but it's still risk off today. Uh, VIX is way up. Oil is way up. Gold is ho hum. Junk bonds flat. 10-year big move. Big move in the Nikkei. Bitcoin, yep, big move there. Nasdaq hasn't been fully hit yet. Let's see. Aiden was updating this. Yeah. See how they run. See how they run. Yeah, we just blew the doors off this. 2 days ago, we had a projection of $92 a barrel. It's just gone. Oh, we added a rig. It's interesting. Canada took down 9 inventories. So the big concern here is the OECD GDP outlook. And if oil stays above $82 a barrel, I think is the number, the mathematical number, it takes down the OECD and pushes up prices, takes down GDP and pushes up prices. We need to pay attention to that. Also, China is struggling, as we can see, and it's projected to continue struggling. There was some hope maybe of a recovery coming, but this is a big but. They were buying cheap oil from Iran and from Venezuela. And now that cheap oil's gone away, so now China has to pay more for their oil, which may push up the yuan, because now they have, or actually take down the yuan, right? Because they have to buy more oil from the open market, which means they have to give up their currency to buy dollar to then buy that oil at fair market value. And so China, let's say, was buying Venezuelan oil for $33 a barrel, and maybe Iranian oil for about the same, although it's better oil. So maybe it was $44 a barrel. But now they're going to have to pay the full $100 a barrel, you know? And you're like, whoa. So, yeah, that's a big change. Oh, shit. Okay, so eyeballing here, we're at very interesting prices for the S&P 500. If you're like, Wayne, that's very confusing, there's too many lines, well, then let's just simplify it. So we go to swing trading bearish bias, and using just sort of the basics. Okay, the trade plan for the month of March: sell the roll reversal at 6782, and the target is 6589, right? And that's actually what it says. Like, no joke, this was locked in on the first. This is a sell, and this is the target for that sell. No joke. Sound like Joe Biden. No joke. Okay. So that trade is actually done, meaning the technical analysis here. So now you have to decide, are you going to try again? If you're going to try again, this is a logical price based on what you see over here, what you see here, and someone has already taken that trade. They did it here and here. Okay. Probably the same people that bought here. Who bought here? Bears. Because bears sold here, bears bought here, bears sell here. There's no bulls. There's no bulls. What kind of bull would buy the S&P 500? I'm going to buy it, but just not today, most likely. Well, that's up to the CIA, but okay. Okay. How far could it fall? How many people want to see how far could it fall? It's just another idea of like, well, what are good prices to buy a dip? Because I'm going to buy. I don't think I'll buy it today, but I might, depending on the CIA. I definitely want to buy around April. Well, we're kind of in that time frame. Now, how about this? I've known for 6 months that in the next 3 weeks, I would probably buy the S&P 500. I've known this for 6 months. Yeah. Somewhere between, somewhere usually closer to the end of March. Could be mid-April, could be mid-March. Well, we're pretty close to that, what I call a window. So for this coming down is perfect for me. I love it. I say, hell yeah! Why am I excited about the S&P 500 dropping? Because I'm going to buy it. And I've known that for 6 months. Yeah. I have cash ready to buy. So this is perfect. Perfect! So how do I know that? Well, that's what seasonality is, and that's what TRADARS has for you. You can just Google that. What do you mean Google it? Yeah. Better load, Aiden. He's messing around with the back office. And not doing a very good job of it, I must say. But anyways, we have the seasonal data. See, it's so funny. I told him to do the analysis once and record it. Don't do it every time you load the chart. So anyways, he's just so but anyway, seasonally is what it's all about. So cool, it's coming down and it makes me happy. Oh, you didn't answer, but I'm going to assume you do care about how low can it go. So I'll just do, what do you want to do? I can do position trading bearish bias. Okay, that's already done. Look how that is. Isn't that nice? Check this out, everybody. Based on logic and intelligence, if you are a bear, no, this whole chart is set up to be bearish. And we know it's usually bearish this time of year, or at least you should know. I can prove it. But check it out. If you are a bear, this is the March sell zone. There's no buy zone. And based on that, okay, this is our conservative target. This is our aggressive target. We kicked off the aggressive entry, so therefore you go for the aggressive target. That's what that is. Dude, amazing, huh? Well, that's what it means. Okay, by the way, let's go to last month. If this is your top, this is your projected bottom. If this is your top, you see the difference? Then this is your projected bottom. It's the higher to the higher, lower to the lower. It's in the training course. It's in my book. This is just like kindergarten stuff, right? Yeah. So now we have to figure out, well, what's next? And that's what I was showing you earlier. This could be resistance, okay? Or that could be resistance. Just fine. But I haven't answered the question yet because that's just the end of March. Like, the March trade is done. Now, does it mean can't go down even further? No, it doesn't. Of course it could. It can go anywhere it wants. But the implied volatility is done. Like, that was implied. Think of it. That was common sense. What happens from here is uncommon. And if you're scratching your head like, I don't know, I don't have any common sense, I don't know this, then you need to know. You need to know. You just need to know. If everybody else knows, why don't you know? Okay. Okay, let's go to the next step. And we are going to show both bullish and bearish pivots. I have to go to an extreme time frame. Okay. And what looks logical to me is this is very possible. Yeah. Now, let me give you doomsday stuff because many of you love it. Wayne, give me some doomsday stuff. All right, let me give you some fodder for the headlines. The war escalates big time. Iran does have missiles, or do Iran do have missiles? No. Iran does have missiles that can go to the lower bounds of outer space. Those are some legit missiles, huh? Not little rockets, but like a real missile. They can go 60 miles and right to the point where there's no oxygen. Yeah, well, yeah, not really space, but a lot of people might consider it space. All right, so that's not your typical little thing that you would shoot down with a Patriot. All right, fine, cool. They fire off a bunch of these, and they take out Saudi Arabia's oil production. And now we've lost Iran's oil production, which is 20%. And then what are we going to give Saudi Arabia? 40%. So let's say close to 50. We'll just say close to 50% of the world's oil production goes offline. Oil goes to $300 or $400 a barrel. Holy schnickerschnucker. Because it would take years to rebuild those facilities. Holy schnickers. Where does oil drop this year? Oh, well, do you know what the chart says? See, I don't know, and I don't know if that's even likely. But what does the chart say? TRADARS is about removing opinion and only having fact. What does the chart say the worst case scenario is? This being a top, okay, if, and again, it's in my book, it's in my training courses, it's in everything. It's on, I have 5,000 hours of YouTube videos. I cover it 5,000 times. If that's our top, this is our bottom. 4,756 for the S&P. See, I can 50. Is that a 6 or an 8? That's an 8. Sorry. See, I can be that precise. Not my opinion. Is that going to happen? Oh, I don't know that. I don't know the future. I don't think it's likely, but that's me thinking now. Well, that's dangerous, isn't it? Yeah. That's dangerous thinking. So, well, that's not probable at the moment. But it just takes one one ballistic missile dropping out at outer space at Mach 9 changed the world. So I pray that doesn't happen. But if it does, I have to do something about it. Right? Praying, I usually say, doesn't help or it doesn't hurt. But what I think is if you pray to your God to save your trade, please, God, let it come back so I can get out. God's busy and he's going to get mad at you. And in fact, he'll say, you know what? You need a learning experience. So if you're praying to God for your trade to come back, God's going to punish you. Yeah. So be careful. Yeah. He's like, really? Really? This is what you're calling me about that? About your trade? Oh, I went long Bitcoin. He's going to say, you know what? I'm trying to deal with like starving children right now, but whatever. You're on your own, bro. What does Nazi say? I was hoping for some up on Nazi. I knew it was early, and then it never panned out. Yup. That's why you test the fence. So what about Nazi coming down 20, 22, 23? Guess it's close to 22. Oh, I might get me some. We just broke through 25. Are we really on our way down to 22? I don't know. But it'd be interesting, wouldn't it? So this is our job. So I am a bull. Let me be clear, and I'll leave you with this message. I am a bull on the stock market. Just probably not today. Probably not tomorrow. Probably not next week. But sometime in the next few weeks, the answer will be yes. And more please, and more please, and more please. I will use stop losses on my trades. Yeah. Because things can change and they can change against me. Just like they went for me this time. It had nothing to do with me. Made a boatload on oil. Great, whatever. Next time it could be against me. Whatever. I don't control it, so I just need to be prepared. Worked out this time, it could be bad next time. So I don't take any, I don't dance around my office like that was a huge success. I'm like, well, it's just another trade. Cool. But if you're investing, then you hedge. I just happen to be doing both. And so I have to pay attention to the market. Is this an opportunity or is this a threat? And if you can't plan it, plan for it, I guess I should say. You can't plan for it, then you don't deserve it. And if you got lucky this time, you're going to get unlucky next time, and you end up with mediocrity at best. So your alpha is to understand and prepare. So what happens today is one thing. What's going to happen the rest of the month, and next quarter is really what you should be thinking about. Seriously, like, what are we in the second week of March? My head is completely wrapped around April, May, June. It's the only thing I'm thinking about. So don't log into New York and you're like, what are we doing today? Dude, I'm thinking about April, May, June, July. Like, whoa. Whoa. That's where you should be. And we have the tools for you. Yep. So anyways, I'm using the Traders Way platform. It's pretty slick, huh? It's pretty. Yeah. And if you use Traders Way through TRADARS, I'm going to give you all my chart templates for free. Most of you already have them so that you can have things like the currency indices. But I'm going to rebuild them bigger, stronger, faster, and reissue them so that it's even better. So that's coming hot and fast in a hot minute. So look, I got to go because I have the Council of Investment Advisors, in an hour. And then, so there's a board meeting. And then I have another board meeting at 5. And I'm thinking about getting involved with another board. So that puts me on like 5 boards. Jiminy Cricket. But Harvard might need a board director. And I'm like, oh, well, maybe. I'm like, it might be a pretty good opportunity. I don't know. Why not? So I have to think about that. And then there's yet another board. There is a state-funded incubator in my city. So I volunteer with the fire department. I volunteer with the police department. And now I might volunteer as an entrepreneur in residence with the local incubator where I'll mentor the young startup CEOs because that's my background, right? And so that might be fun too. So it sounds like a lot, but it's just because I don't watch TV. And I also don't take weekends. Like I work all weekend. So anyways, it sounds like a lot. And you're like, well, what about me, Wayne? What about me time? I'm like, oh, I got you time. I just don't waste time, right? So anyway, so there's my life in a nutshell. Give back to as many, give back to society as much as possible. Yeah. And the organization I work with in the this afternoon, I manage their endowment, but the organization was created after World War II and has been focused on essentially peace on earth through cultural understanding since 1945. Right? Kenny, I focus right now on the mornings, but we'll probably switch to 5 p.m. And I'll be restarting the quarterlies extremely soon. I guess probably the April one. Yeah. Yeah. We got some really good tools for that now because Aiden, our AI, already does the math for us. So now I just have to explain it. Let's see if I can give you an example as we part ways here. Oh, wait. It's on the seasonality. I don't think that was loading properly. Let's try it. Because we got stuff uploading right now. Okay, we got it. So, S&P 500. Look, I know somewhere around April I want to buy. That's all I know. Okay? Here's what I predict if I were me. Stock market comes down. Okay? See, we were just talking about this. See, there's a dip. You see the dotted? Here, let me open this up. Will it let me open it up? I never actually tried that. Can I pop that out? I mean, dude, just this. If you were to, there are 2 services that I know that I've paid for that offer seasonality. And at one point I was paying like $300 a month. I don't know what it is now. But let's say just this page alone is worth $100 a month. Minimum. Cool. And yeah, and that pops the wrong view. So I know what I can do. I can snip it and then zoom in. Let's try this. Just want to make the point here. So quarterly outlook. Okay, let's do Wayne's quarterly outlook. And, but again, I know it's helpful to have someone explain it. Can I zoom in? There we go. Now, here's what's very, 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 very interesting. Remember, I spent a year training ADA, our large language model. You know what I think? And this blows me away. Okay? This blows me away. This is what I think. I had no input on this. I only taught Aiden how to do macroeconomics and seasonality together. And trading. There's technicals in here too. So he knows how to trade technically on multiple time frames. I forgot that. So he's very, very, very good at trading technical analysis the way that I would. He trades the way I trade because I taught him. He doesn't know any other way. I got mad when he started giving me ChatGPT bullshit. So I cut that out hard and fast. And now he only trades the way I trade. And then I taught him macroeconomics. And he only knows the way I did because when I started talking to him about macro with him, he started giving me ChatGPT bullshit again. I'm like, this is stupid. I'm like, prove it. And then so this is why we started doing correlation analysis and seasonal analysis. And much of these things that ChatGPT tells you is true are rules of thumb printed on the internet that are in fact not provable. You cannot confirm what you're told is fact in a laboratory. It's not repeatable. It's bullshit. Sorry for all the cursing, but I'm trying to make a point. So I taught him reality. So I say, here's what I've seen as a trader over the last 25 years of trading every day. And here's the macroeconomics, and here's the relationship I believe to be true. Now let's use data to confirm or deny that not just is it true or not true, but how true or not true is it quantitatively. Maybe it's somewhat true. Maybe it can be true. Maybe it's a little bit true. Maybe it's not true at all. Maybe it's exactly totally wrong. Okay, so we went through all this, and so now it's all math. It's my 20 years of experience, my Harvard education, and my technical analysis, all entered into a large language model that is designed to answer the question, what would Wayne do? No, it's a big speech, right? Big speech. So this is the part where I get all tingly. I look at this, and this is my opinion. I used to spend hours doing this and then putting together a presentation. And I'd say, hey, Kenny, this is what I think. I literally had charts like this that I would make. And I think it'll start up, and then I think it'll start down, then I think it'll go up, and then I think it'll go down, and then I'll think. And this has nothing to do with the war in Iran. This is what I think based on normal macroeconomics. And the abnormality is the war in Iran. So then you can adjust accordingly. But you still have to have what is normal, something that you can plan, and then the thing that messes up your plan. But it's a known unknown. Okay? So if you were to ask me on the 1st of January, this is what I thought this year would look for the S&P. And when I open up this chart and I look at it, I'm like, holy Snickers. Now, the gray area is based on what's happened before. That's the lowest dip you could possibly predict. So there is a chance that we have to adapt and probably get something closer to this. Oops. Okay. Because now we've taken 20 years of data and say seasonally, and we're doing technicals, and we're doing fundamentals, and we're doing all this stuff, and we're like, based on all of this, mathematically, we can get as low as here or here. Whoa. But this is, okay, is still what's expected. Now, if the data gets extraordinarily worse and the stock market drops 50%, oil goes to $300 a barrel, well, Aiden's going to adjust, just like you're supposed to adjust, like I am supposed to adjust, like we're supposed to adjust. Okay? So you can see S&P 500 usually has an okay March, followed by a bad April, which means somewhere in this March to April period is actually where we want to buy. You want to buy when it's red. But March is usually a decent month, and VIX usually falls. Isn't that nice? So we know something unusual is happening. So what you can do is shift everything to the left. The drop might be earlier, or it'll be sustained where we have a bad March and a bad April, but it doesn't matter. If we have a bad March, let's say it falls the rest of March, and then it falls 2 weeks of April, and we're around tax season, and we're still negative. Well, somewhere in there, I believe, because I have the numbers, just look at the numbers. Up, 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 up. Up, look at the chart. Up, 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 up. So we could have another 6 weeks of just terrible. And I'm going to be smiling ear to ear as I see a double bottom on hardcore, let's say, monthly pivot points or annual pivot points. And everything is terrible. And CNBC is talking about the end of the world as we know it. And I buy that double bottom and I'm long not just for a minute or an hour or a day or a week or a month. I'm long the next 20 years because I have a plan, Stan. I'm long and strong, down to get the pippin' on. Thank you for your time. Thank you for your attention. Please leave a comment or like or subscribe or whatever that YouTube nonsense is, whatever I'm supposed to tell you.